Good morning. It's an amazing morning this morning, a fantastic new month, the beginning of the last quarter of the year, and of course the beginning of the week. I'll be continuing the breakdown, my outlook for the week ahead of this last quarter of the year. In the previous videos, as I've already outlined, we were targeting this buy side liquidity and of course the entry of the monthly sell side imbalance, which we tapped into from this candlestick's low to this candlestick's high. We have this CB and we have all these levels inside of it, which we're going to go into on a lower time frame. The one to keep note of is this dotted line, which is the consequent encroachment, the halfway mark of the CB of this purple area. So going down to the weekly chart, which is one of my favorite charts. It's the one area where I would spend most of my time on, and in this case I haven't really removed all these illustrations because I wanted to do it when I started the recording. So delete. So going into this week, my target for the week ideally would be the consequent encroachment of the monthly sell side imbalance, this dotted line. So I'll be looking to see if we can target this level. Then of course, if we can, depending on how much we displace above it, we can clear this buy side liquidity, which is this swing high residing here. Right, so we have a buy side liquidity there, and there's a high chance we could clear these levels in this week, the 107.715. But we'll look to see how fast we get there. Before we continue, I wanted to go over the economic calendar for the week. And firstly, let's remove the low impact and select none, leave only USD, apply filter. So this week we have, today on Monday by 10 AM we have PMI numbers being released, and by 11 AM, an hour later, we have a speech by Powell. And then tomorrow we have another data report release of the JOLTS jobs openings. Wednesday we have an all-day meeting, as well as the, I like to call this pre-NFP numbers. I'm not really sure what it entails, but it's before the New York session opens. And then at 10 AM we have PMI numbers, the services numbers. Of course, today we have the manufacturing numbers, here we have the services. And Thursday, unemployment claims, then Friday we have NFP. So my trading days would be basically every day, because there is a news driver, a red folder or orange folder, that's actually on every single day of this week. But on Monday, today, I would find a trade opportunity. Tuesday, I'll also find a trade opportunity, and Tuesday is probably going to be the highest probability trade in this week. And then Wednesday, I'm a bit 50-50 on it, because these are the 3 days that leads to NFP: Wednesday, Thursday, and Friday. So Wednesday, I'm going to reduce my risk. Then Thursday, I probably won't even participate at all and wait for Friday's data, or I might just participate during London's session. Friday, same thing, I might participate during London's session, or wait for NFP, wait for New York to play out and wait for NFP's data to come out. Then I can continue, I can trade the rest of the day. But we'll see how the week unfolds. So I wanted to quickly point this out before continuing our analysis. Keeping all that in mind, I would like to see if we could probably trade higher from today being, let's go down to the daily chart, from today being Monday, and then Tuesday, then Wednesday, then Thursday, and possibly on Friday we may get something like this: a shoot up during NFP and then a retracement, probably not to clear Monday's low, but a retracement into the weekly range. So NFP might be what actually sells off, unless of course we clear the buy side that I highlighted, which is above the consequent encroachment, and this might be where the high of the month will form. This might be where we peak before finally starting to clear all these sell side liquidities that we've built up over the past couple weeks. So we might get something like this for NFP. Moving on, having a quick review of the previous week, we got this displacement on Thursday going into Friday, because on Thursday we had a peak, then a reversal, and even I thought that finally we're going to have a bit of a consolidation or a bit of a pullback into the range, and there was a sell side liquidity that I was looking for on a 1 hour chart, which I'll show you, but looking to see if we can clear that, but we didn't. We just spiked down, respected this sell side, this buy side imbalance on a daily, and it's also there on a 1 hour chart. And yeah, we did wick through it, but the body did not close inside of it, and we didn't spend too much time above it. And anyway, if you were taking a buy entry from here, your stop loss would have been at this candlestick's low, as ICT mentions. The 3 candles that create the fair value gap, pick the lowest one, and that's where your stop loss should be. So either way, your stop loss would not have been tagged. Going down to let's start with the 9 hour chart. We can see the same thing. We respected this 9 hour buy side imbalance on Thursday and Friday. Thursday going into Friday, we respected this, and now rejecting higher. Today, Monday, we have this other block that we're creating now. Of course, we have this balanced price range, but I'm looking to see if we can go trade above it. I'm going to note this other block on a 1 hour chart, and I'm going to also note this balanced price range. Which is of course an inversion fair value gap in this case. So I'm looking to see if we could either trade back to this during New York and higher, or trade above this and then use this as support for higher prices. It'll be better if we can close above this balanced price range, which is in 4 hours time. Close above this without taking this buy side, without taking Wednesday's high from last week. If we don't do that and we come back into the balanced price range, that's an easy opportunity to buy the dollar to the upside. So we could get these 2 possibilities, and I'm keeping an eye out on them. Let's go down to the 1 hour chart. Of course, we have very similar structure. Inside of this other block, another confluence is here. We have a volume imbalance, which is technically a new week opening gap. So we have not only the other block in this area, we also have the new week opening gap, which is a second confluence. So if price ever finds its way this low, which I don't think would be possible, which I don't think would happen, but if we ever do, I'm paying attention to it for higher prices. We may continue trading higher. We may use this balanced price range for higher prices, and then probably on Friday, during NFP, we might get a quick rejection, a quick spike into this new week opening gap, then a continuation to the upside until we clear that buy side liquidity that we highlighted from a daily and a weekly chart. There's no need for me to go on lower time frames than this. Everything else is self-explanatory. Of course, we expect higher prices on USD CAD because we're expecting higher prices on the dollar. We are also expecting higher prices on USD JPY, but those don't really matter to me at the moment because I'm trading EURUSD and GBPUSD. On EURUSD, we have very similar structure, just in the opposite direction. I know there's too much going on my chart right now, but I'm looking for the exact same thing. We can see on the 1 hour, we have an order block there that turned into a breaker because it failed. So during New York, I'll be looking to see if we could use that to support lower prices. So during New York, I'm looking at these two PDRAs. This one on the 1 hour. Please excuse me for a second. This breaker, bearish breaker on a 1 hour chart. We also have, of course, the imbalances, which we are most likely going to tap into. So there's a likelihood we'll leave the breaker and rather just take the imbalance, the 1 hour imbalance, because I don't see anything solid on the 4 hour. Of course, 4 hour might respect this inversion, take us higher, back into the CB, then continue lower. So, but of course, I'm bearish, and I believe we're coming for this sell side liquidity. So, ideally, we would have anticipated or wanted to see us tap into the breaker and shoot lower, but there's a chance we don't do this. There's a chance we just tap into the imbalance and shoot lower. So two possibilities. Of course, my invalidation point is the swing high, which is London's high. I don't want to see us make a new high after this one that we just made now. So this is my invalidation. Yeah, so we have the CB or the breaker. That's all I'm looking at. Moving on to GBPUSD. Again, a very similar structure, nothing different across the board. Just want to remove these lines without carelessly removing anything else. This was the London session trades that I took, but I'm not going to go over that in this video. I'm also looking for this sell side liquidity to be targeted on GBPUSD. The higher time frame drawing liquidity is still going to remain the same. Everything else, my drawing liquidity still remains the same. Ultimately, there is difference on GU and GU going to the monthly chart. My drawing liquidity is actually the sell side. Drawing liquidity is the sell side liquidity, which is inside of this this BC, this buy side imbalance. So I'm looking to see if we can hit this by the end of the week, especially this week being having so much news drivers and NFP. So I'm looking to see if we can target that low. The reason I was targeting this area, this purple area, as my draw on liquidity last week was because of this fair value gap in a form of a buy side imbalance. So I was paying attention to it, but now that we've traded to it, I would like to see us close below it. I know this is a weekly chart, but I believe there's a daily there's a daily of it. There's a sitting over there, the daily fair value gap. So today being Monday, what I would like to see is are signs that we are looking for lower prices. So I'd like to see if today could close below this buy side imbalance, right? Even if it's just by 1 pip. Then tomorrow, whenever we trade to it, I would like to see it act as resistance for lower prices for the rest of the week. So this is what I'm looking for on GBPUSD, especially being the weaker of the two compared to the euro, and euro also reaching its high time frame draw on liquidity. I'll be paying most of my attention on GBPUSD instead, and risking more on GBPUSD as well. So that's all I'm looking for on the pound. We are close to this sell side liquidity already, and I believe euro has already cleared the sell side. Well, the sell side is different on euro compared to the pound, because on pound this sell side was created on Wednesday, while euro, it was also created on Wednesday, but we already took Friday's low at that point, and Thursday is residing there, but we haven't taken out Thursday's low. So the next draw right now is this sell side liquidity, but of course I'm targeting the previous week's low, which is over there, and I get the feeling that we might clear this sell side liquidity by the end of today. So we might get a very heavy week because of us being in such a rush to get to the sell side that I mentioned earlier, and then probably see a reversal into the range from NFP on Friday. So that's all I have on the currencies. Indices, of course, I'm looking for the same thing. I already have the 1 hour chart outlined here, because we have the Tokyo high swept, which is the Asia session high. We've gotten the displacement that we needed, but I would have preferred seeing a closure below this area, this volume imbalance, which is technically a new week opening gap, which I think we just got by, I don't know, a few handles over there. So this closure below the new week opening gap gives me the confidence that we are heavily bearish, but I wouldn't like to see these relative equal lows swept. I say they're relatively equal and not perfectly equal, because looking up there at this low, which is 14884.25, looking at the low of this candlestick, we have 14811.25, and the low of this candlestick 14811 flat. So technically we haven't even swept the sell side liquidity. We got close to it by a quarter of a handle, but we didn't really sweep it yet. So that's why I call it relatively equal, but it's technically just equal lows. So I'd like to see New York session open up and take us back into the range. It can be this fair value gap or the breaker, any of the two, before continuing to the downside. So personally, I'll be looking for this entry, this candlestick's tail. I'll be looking for this entry, but anything is permitted. Anywhere in the range is permitted to me, as long as we don't take the equal lows, because the equal lows staying will give me the high confidence that we're going to clear it today. Of course, on a high time frame, starting with the monthly chart, going on the monthly chart, ignoring the mess, I'm looking to see if we can get a complete closure of this buy side imbalance. So for the rest of the month, I want to see this, a complete closure into this buy side imbalance. With the E-mini S&P 500, we've already closed it, and I believe the close of this candle was technically the high of this candle as well. So that was a perfect 20% retracement into the monthly range. Looking at the monthly chart, we can see that we have a lot of choppy range down here, and I get the feeling, especially when price was in here and knowing how price was playing around in here, we might get something similar when we falling through, unless price is really bearish and we just keep on targeting sell side liquidities. Of course, going down to the weekly and daily chart, it's a little easier to work with because we have many volume imbalances and sell side liquidities. Personally, I'm looking to see if we can target the I wouldn't like to see lower prices because of the daily chart, because of how we traded into this order block. 1 second, let's erase this. And looking at ES, because again, I'm still extremely bearish on the ES, but I'm not neglecting NASDAQ, because I believe NASDAQ is the sixth sister and it's going to play a game of catch up very soon. It's going to run quicker than ES will. But I'm looking at the fact that we respected this order block, this candlestick right here. Of course, knowing that the most sensitive area is the tail to body. Let's delete this for now. We know the most sensitive area is the tail to body of an order block. We can see how the bodies of these candles have been accumulating inside of there. So I would not like to see higher prices from here. I don't want to see Tuesday creating the high of the week. I want to see us continuously trading downwards from here. And my first target, of course, being last week's low, then the next target being the swing low. But I would like to see if NFP wants to trade back to the new week opening gap for this week and then continue lower from next week. So my trade idea, of course, as I've highlighted on the NASDAQ, is a retracement, an OTE entry basically that ICT teaches, which is from the 62% to the 79% of the range. So I'd like to see measure from the range high, which is today's high, and today's low. We've got the 50% residing there, and we have the 62% residing there. So I would like to see if we can trade back into this area. Then I'll take my sell positions on E-mini S&P 500. So that's what I'm looking at. One thing I find a bit interesting, I know there's too much there's a lot of lines on my chart, but one thing I find interesting is that also in this order block area, we have the consequent encroachment of the new week opening gap, because this gray shaded area, this gray area is where the new week opening gap is, right? And we can see the consequent encroachment of this new week opening gap being the dotted line, and also collides with this order block entry. So I'd like to see if we can get a retracement there, and then of course a fall off from there. What I find interesting is that looking at NQ, we have a combination of two new week opening gaps. We have the one from this week, from this low of this shaded area to the high of the shaded area. This is the new week opening gap. We of course have the consequent encroachment, but we also have this new week opening gap that extended from this week on the 21st of August. On the 21st of August there, extended to the right, we have it colliding with this week's one. So NQ, or NASDAQ, being the stronger of the two sisters, I would not be surprised if we see a deeper retracement into the higher portion of the current new week opening gap before falling off. So yeah, I'm not going to be looking for my shorts on NASDAQ, and I'll probably be focusing more on E-mini S&P. But of course, as I've already outlined, we have a clear draw in liquidity at this these equal lows from last week, from Friday. So that's what I'm looking for going into New York, and I've already shown my drawing liquidity from a monthly chart. And that's all for now. If you have any questions, of course, do not hesitate to ask in the comment section. Any pair, any liquidity, any instrument that anyone else would like to see me analyze or give my inputs on, I'm open to that, and I'm open to breaking down any chart as many of you may want or may like. In any case, that's all I have for now. Good luck and good trading.